Hi, it's Kristen. Today is Thursday, April 23rd, 2020, and we are in the middle of our coronavirus pandemic and probably a recession. But does that mean we're going to have the housing crisis like we did in 2008? What does that mean for the local real estate market? Are there still transactions going on? Are people still looking for homes? What is the unemployment rate? Where is it going? How fast are we going to recover? These are all questions that we've been asking ourselves, and I was able to get a little bit of insight recently onto some of these things, so I thought I would talk about it a little bit. I have some charts and graphs to help support some of the information, so I hope you can find some of this useful. Here today is, will this affect the housing market? And I have some current data to suggest that no, it does not appear so. We all remember the housing market leading to the 2008 Great Recession, but it is likely that the housing market will lead us out of this one. Let's look at some facts. Over 37% of all homes are owned free and clear, meaning there's no mortgage debt, and 38% of all homes in America have at least 50% equity, making homeowners feel more secure. Historical data from the Freddie Mac Home Price Index also shows us that only two recessions from 1975 to present have affected the housing market, this being the Great Recession from 2007 to 9 and the Gulf War recession from 1990 to 1991. There was a variety of things that led up to the 2008 crash. Let's look at a couple of them. The significant home appreciation increases in the years leading up to the housing market crash, as you can see here in the red. Evaluations of properties were at unstable levels, and people found themselves with negative equity, meaning their mortgage debt was higher than the value of their property. Compare that to the last 6 years here in green, which have been much more stable. And don't forget the last slide, people have much more equity in their homes now as they did then. Also, the inventory of the homes on the market is very different. That gray bar that's in the middle of the graph, that's the sweet spot. Having a 6-month supply of homes on the market is a healthy balance between supply and demand. As you can see, there were many homes on the market leading up to that crash, and we have been in short supply of homes for some time now. In Rhode Island, there is about a 4-month supply for single-family homes and condominiums and a 3.5-month supply for multifamily properties. Condominiums have become an attractive option for first-time home buyers due to the scarcity of single-family starter homes. This slide shows in blue the predicted home appreciation percentage before the COVID-19 crisis, and the orange is post-COVID-19 projections. So this year, it's projected to be 1.7% lower, but next year, 0.6% higher as the market recovers. You might be thinking that a 2021 recovery is too optimistic, but let's look at the next couple slides to see what the experts think. Goldman Sachs, JP Morgan, and Morgan Stanley all agree that they expect a V-shaped recovery, possibly a U-shape, but there is no indication of an L like what happened in 2018. These are the largest financial institutions in the country, and see how closely their predictions are lining up. The Harvard Business Review looked back at the pandemics of the 1918 Spanish flu, the 1968 Hong Kong flu, the 1958 Asian flu, and the SARS epidemic. In all these cases, the recovery was with this V shape. These recessions have a quick enough recovery that there is little damage to home prices. This slide came out about a week later than that previous one on April 15th, with Wells Fargo also releasing its V-shaped predictions. As expected, there will be a decline in the first 2 quarters of 2020, but look at the recovery in the third quarter. Morgan Stanley is predicting a 20.7% increase in the third quarter and a 15.9% increase in the fourth quarter. Now let's talk a little bit about the unemployment rate, which, as we all know, has reached record levels, currently 4.4% nationally and 4.6% in Rhode Island. The prediction for employment recovery is also in a V-shape, lasting about 2 years. Business owners were asked if the economy was to fully reopen today, how long would it take to get your business back to usual? 22% said less than 30 days, and 39% said 1 to 3 months. We see here dramatic decline, but a rapid recovery. We all know that a slow, prolonged recovery would be devastating to the economy, but hopefully with this rapid recovery, people's housing will remain secure. And there are still jobs out there, over 1,800 of them listed here in Rhode Island. Let's look at these numbers for Rhode Island. A current employment rate of 4.6%. Education, health services, trade, transportation, government, we all know these jobs are going to come right back as soon as the government allows reopening of business. It might take some time for some of these industries to to bounce back for sure, but we are Americans and we are very resilient. And don't forget, we've learned how to manage the seasonal flu, which affects us every year. While not as dangerous as this COVID-19, still pretty significant. Our COVID-19 numbers in Rhode Island have remained fairly steady for the last week. The governor has stated that the stay-at-home order will remain in effect until May 8th, and then the government and the economy will begin to reopen in stages. Real estate has been, and will remain open. During the last week here in Rhode Island, there were 153 active houses placed on the market, 249 new listings, 18 coming soon listings, 2,002 pending sales, and 232 houses sold in the last month. Some people are waiting for sure, but almost 60% of both active buyers and active sellers said that they are still ready and they will resume their search or put their house back on their market once the COVID-19 crisis has recovered. Well, I hope you found some of that information useful. And if you have any questions, please reach out to me. I'll put my contact information on the next slide. If you are someone who thinks they want to put their house on the market, or if you want to look around at what we have on the market now, or what we think might come on after the crisis is over, I'd love to hear from you. We could schedule a Zoom meeting so we could talk about it, or even email back and forth to see what you're interested in. So looking forward to hearing from you, and stay safe out there.